Hey traders, this is Ron Haidt at Market Tamer. Happy Wednesday, happy hump day. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Dow. The markets were mixed today. The Dow is down, 0.4%, no real change here. If we go to the Qs, they were up almost 0.4%. The Qs, though, they are holding on to that 50-day moving average right now. That's still positive for the bulls, but if we lose it, remember, we're going to come back down here and test those swing lows from the end of June, beginning of last month here in July. Now, Apple, I was curious to see how it was going to trade today because it was up, 7, 8, $9 after hours. It actually opened and went to the highs of the day. We finished at 201.50 on the nose, almost 6%. So this is looking good for tech land in general. If Apple would have reversed, or hey, maybe it reverses tomorrow and sells off, I think that puts a little in the excitement in the tech sector. It's just going to be tough because other stocks like Amazon, Google, looking a little tired there too. Speaking of Google, why don't we just do that one now? Google is going to be able to, it looks like, get into China with I shouldn't say a mini-me version, but a limited version based on what the country of China wants to allow their people to see. But Google's really not responding in a big way. It's just hanging in there. BIDU had earnings, so it was not only down on earnings, but probably some of the idea that Google could come into China. BIDU has a double bottom right around 210-ish, 212-ish. That's still, just $20, 16 to $20 lower. That would be the support target right now for BIDU. It's not quite 10%, but it's still a good chunk of change nonetheless. Cake had earnings, which is the Cheesecake Factory. I love eating there. The cheesecake's amazing, but so is the food. The only problem is oftentimes, at least when I travel, whether it's Vegas or San Diego or somewhere else, the lines are always just so bad. It's ridiculous. The Cheesecake Factory closed below the purple line, which is the 200-day moving average. Yeah, it came off the lows, but that is some mega volume for this stock historically. The target's down there near 45. You can make an argument, another 10% drop until some serious support comes in. There's some consolidation near 47.50, so maybe 4 or 5%, but then there's still another 5. Bottom line is it's not looking good for this stock. COHR, there's some serious upside targets here from a technical perspective. Not saying it's going to get there, but we just had a nice little pop on earnings. Volume so-so, but I'd want to keep an eye on this one. If we could close above that closing high right there, 185.30, need about another $6 here. We get over that, then we're up to the 200-day at 225. That's a huge jump, and it's well over 10% at that stage. So keep an eye on that one if you find it interesting. Here's Ferrari, not a stock we look at very often. I was just scouring some headlines looking for some stuff that moved today, and stock was down 11%. That's a big deal. So 6.4 million shares. There was a lot of consolidation in here from February, March, and April. That's literally right where we stopped. But here's what's noteworthy. Look at that purple line. We have closed below it. So if I go back and do a 2-year look at Ferrari, it's been a long time since this stock has traded below its 200-day moving average, even going back 2 years. So this is a big deal. This is institutional, in my opinion, a reaction. The next major support's down around 105, $15 lower. Again, 10+% downside. How about Whiting Petroleum? This thing was on the watch list a while ago, and the stock was in a trading range. And I said, hey, earnings are coming up. If it breaks this range, there could be potentially some nice downside movement, because all it did from really, February is just keep moving higher. Well, that happened today. Now, it hasn't been a massive move. We were down 8%, but we also finished off the lows. But a break has occurred. So the 200 days, the immediate target, $10 lower. That's 20% lower. And then all the way back down here to an unfilled gap in the 20s. Keep in mind, this is technical analysis. This is not a guarantee or forecasting it can go there. That's just where the next levels of support would be, where maybe some buying could potentially come in. And casino stocks had a bad day today. We had MGM, Caesars, Las Vegas Sands, Wynn's down like $5 after hours. But here on MGM, this was a rough one, down 9%. We're already testing those lows. Below 28 is bad news. If we take a look at Caesars, it's a much cheaper price stock. It was down nearly 15% today, came off the lows. It's not looking good. And like I said, Wynn's down like 5 more after hours, so it puts it right in here Watch 150 on win, because then you're starting to talk about 140 as targets. So I'll keep an eye on these casino stocks heading into the next couple days, see if there's any more activity to the downside, or if we're going to put a bottom in here. But across the board, they're looking weak. With that, I wish you a great rest of the week, and I'll see you in the next video. Take care.